Guys, is At&T stock you buy right now? Currently, At&T is trading at $14.80 as the time of the recording of this video. Now, for the past year or so, it was nothing but bad news. Is At&T going to spin off Warner Brothers? Is At&T going to cut the dividend? Is At&T losing or gaining subscribers? Is At&T dividend safe after the spin-off of Warner Brothers? And now to top it off, when we thought that worst was over, bam, At&T has a lot of toxic cables around the United States, which is going to cost a fortune. All of this caused the stock to sink all the way to $13.50. Now, if the stock recovers all the way up, guys, this was a rare opportunity. However, we're going to take a look at what's happening now with At&T. Is the sentiment still down? Are the technicals bad? What is happening with At&T currently? Let's take a look. And remember, I am not a financial advisor. Please make sure to consult an appropriate advisor and do your own research before making any investing decisions. As we can see here, guys, At&T is currently at $14.85. The first thing I want to look in At&T to know if is At&T a buy or not is, let's see the dividend history here. In this chart, we see the dividend history for the past 5 years. We can see clearly here when the dividend cut happened after the spinoff of Warner Brothers. Now, ever since then, the dividend has been cut to 28 cents. My hope is with this latest quarter coming up now in October 20th, I really hope they do increase the dividend. Even if it is by a penny, at least it can start counting towards dividend increase every year. Now, the second thing that we're going to look at is stock valuation, guys. And as by now, you guys, many of you know the valuation that most people online use, which is the Graham valuation, the discount cash flow valuation, the dividend discount valuation, and the multiples valuation, guys. So now let's take a quick brief look at these valuations and see what we get. Now, here we see the results, but let's see the details, guys, on the valuation chart. First, let's see the Graham valuation. Earnings per share, 2.11 cents, guys. The AAA bond yield at this point is 4.95%, guys. This is playing very bad against dividend stocks such as At&T. Now, this gives us an intrinsic value based on Graham valuation of $14.97. Now, let's move over to the discount cash flow valuation. Based on this, we can project the next valuations for year 2023 all the way to 2032. Growth rate of At&T currently is 0%, but analysts projecting at least 2% growth of At&T. Now, based on this, it gives us a discount cash flow valuation of $17.57. Okay, now let's go to the dividend discount valuation. We see here from 2019 to 2023, the dividend currently is yielding $1.11 per share. However, remember, guys, in 2022 was the spin-off of Warner Bros. Therefore, the dividend was cut. Dividend growth rate minus 12% because of this spin-off. However, for this valuation, we're going to pursue a dividend growth of 1.5%. Now, this gives us an intrinsic value of $16.13. Now, go back into the multiples valuation. I don't know if we can even use this because at this point is almost no comparables, guys. No comes to evaluate At&T with. The only one in the United States is Verizon. Now, Verizon Communications and At&T are also facing the same issues as the cables that are all around the United States that is toxic to everyone, is going to cost a fortune to fix. Now, both of the stocks are trading at a low multiple. Now, based on this, on Verizon's multiple, the multiple valuation gives us a price of $13.92. Now, we put all of this together, we have an intrinsic value of $15.65. However, I'm using a margin of safety of just 3%, guys. The reason why is because, in other words, the margin of safety has been taking place in At&T currently with all the bad news. Therefore, I just use a 3% margin of safety. This gives us a buy-in price of $15.18, guys. Now, based on this and currently trading at $14.87, guys, At&T is a buy. Now, another good thing about At&T is the dividend payout from free cash flow, guys. The dividend payout is 45% of free cash flow, which means At&T still has $10 billion to pay its dues, to reinvest into the business, or to pay down debt. Now, let's see some general information here, guys. Based on the 52-week high and low, 52-week highs of $21 and the lowest of $13, guys, At&T is almost is more towards the lower side than the high side. Now, earnings per share $2.11, the PE of 7.1%, and a yield of 7.5%, guys. This is the tempting part. I mean, who is not being tempted by 7.5% yield and dividend payout from cash flow of 45%, guys? This is very, very attractive. Now, are the fundamentals there? I don't know. Let's wait to see. However, looking at it from pure yield of 7.5%, and the cash flow can easily cover the dividend yield. Tempting, guys, tempting. Now, institutional ownership is 56%, not the best, however, not the worst either. Now, in this chart, we see the revenue versus profits. One of the things that I do not like to see is this. Revenue pretty much almost consistent, but profits have been going down and down and down. However, this is one of the most important measurements that I used my own personal investment is free cash flow to dividend. And the free cash flow is represented by the green line and the dividend is the orange bars. Now we see here that the free cash flow has been going down for years and years. However, since this year, 2020, now we see that the cash flow, the free cash flow has started begin to increase. We went from quarter 4 2022 from 12.3 billion to now quarter 1 2023 with 13.7 billion. Now quarter 2 of 2023, we see that the free cash flow increased to 18 billion, guys. This is good. This is good. I like to see things like this. Since the dividend was cut to adjust for Warner Brothers spinoff, we see that AT&T can easily cover the dividend. Now, let's see the stock price. Stock price movement, guys. Here we see that in the past 5 years, AT&T pretty much is a bad chart. Now, if we look at it from the chart position alone, walk away from this stock. Don't invest in this. The chart does not look good at all. However, all of this have explanations. For example, this drop here is during the pandemic. It drops, then it continue. Then over here is the Warner Brothers spinoff. It went down and it recovered. And then the last drop here is the cables situation. So yes, the chart looks bad. However, it has very good explanations that are not AT&T's fault lately. Now, for the past 5 years, we see a negative average return of 10% yearly or 40% overall. Now, during the last 12 months, guys, the stock is down almost 5% or 71 cents. Now, based on this chart here, in the last 12 months, red represents the highest the stock has been and green represents the lowest the stock has been. Now we see that currently AT&T is on the greenest it has been for the last 12 months. Also, it is in the greenest it has been for the past 5 years, which represents a good opportunity if you are going to enter a position in AT&T. Now let's continue. Based on what I have seen so far, guys, to me, are they fixing the mistakes? Another thing that is against AT&T is the debt. Long-term debt is just too much. However, we see that per the last quarter, AT&T still have $10 billion in free cash flow after paying the dividend. And overall, AT&T is paying around 20 to 30% in dividends and having the rest as free cash flow. This is a very, very good news, which means the dividends is sustainable so far, and they can use the rest of the money to start paying more and more of that debt. Another thing is, I think all of the bad news is already priced in. It's nothing but better and better outcome now. Also, we see here back again to this chart, the cash flow, the free cash flow is making the U shape. I love saying this, guys. They are generating more and more free cash flow, which is great. Now, since all of the bad news is already baked into AT&T, the sentiment is also down. However, I see that the sentiment could shift to the upside. Now, analyst targets for this stock is $20, which represent a 36% upside to the stock from this price on. Now, let's see the technicals, guys. That will give me more indication that the stock is a buy. Now, we see here, guys, after earnings on April, it was a bad quarter. This is when they question AT&T growth potential, if they are losing customers or gaining customers. Now, here it broke down heavily all the way to $17 from $20. Now, the stock started going down and down and down. One thing to look is the 50-day moving average crossed the 200-day moving average. This is a bad indicator. If we go pure on technicals, this is a bad sentiment to the stock. However, When it crossed, here we see that it started bouncing, started going up until it hit the 50-day moving average again. Now, everything looked good. If we come here to the RSI, we see that in this date, it hit the oversold. Here it was on pace to break the 50-day moving average and go back towards the 200-day moving average. However, this is when the news of AT&T toxic cables came out, and it bounced off the 50-day all the way to the lowest, to the 50-week lows. Now it hit once again oversold, and now if we look again, it's been recovering, it's been up and up until here on August 30th, guys. Here it broke the 50-day moving average. Based on technicals alone, guys, it broke the 50-day moving average. The MACD crossed over as well. Now we see positive sentiment here, and it continued the good run. Now over here is when we enter 9. Over here, if we see exactly here on technicals alone, is when it hit 70 of RSI. So therefore it bounced lower. Also, sentiment for the month of September is low and is a bad sentiment. Therefore, it bounced to the lower. Now here we see, guys, on the 26th, it almost bounced off the 50-day moving average back to the upside. Now, my guess based on this alone, it adds up to the sentiment that I see. The free cash flow is going up. All of the bad news is already baked in. So with the bad news baked in, cash flows, free cash flow going up, AT&T paying down the debt, AT&T can easily cover the dividend. My personal opinion, once again, is this stock is a buy. Now, one last thing, guys, to pay attention to is AT&T earnings is in October 19th. This October 19th. If we go back to the options, guys, there is one thing, guys: follow the smart money. Follow the smart money is a play that those who knows how to play it can make a lot of money. Now, based on this, AT&T's earnings is on October 19th. If we go to October 20th, options, this is what I see, guys. Look at this. Open interest is just too much open interest. We see 32,000 contracts for AT&T $19 strike price. 32,000 open contracts. We see now 6,000 contracts at 20th, $6,000 at $21, $6,000 at 20, $32,000 at 19. 32,000 contracts, guys, at 18. 13,000 contracts at 17. 42,000 contracts open interest for $16, guys. Now, if we go closer, we see 36,000 open interest contracts at 15. However, it's this right here. Now, let's see how many contracts are open to the opposite. Now, we see that 32,000 contracts are to the for $14 strike price. This could be a coverage, or this could be a hedge. Now, if we look at this whole column here, guys, and compare it to this, open contracts are more positive to the upside than the downside. Therefore, this is the last signal that I need, in my opinion, to know that, guess what? AT&T is a buy, and heavy players are betting heavily that AT&T will have a good quarter in October 19th. Therefore, they are putting lots and lots and lots of money. The October 20th options contract, guys, they are betting heavy money that AT&T will have more upside than the downside. This is the last thing that I need to know. Personally, I think AT&T is a buy. Having all of this in mind is AT&T is paying down the debt. AT&T can easily manage the dividend. The dividend is 7.5% yield. The sentiment is going the opposite. All the bad news is already baked in on AT&T. On top of that, if we go based on technicals, the technicals are telling us that AT&T crossed the 50-day moving average. It bounced off the 50-day moving average, hopefully to the upside. We're in the last of September, which means the worst trading month is over. We begin in October, the fourth quarter. Positive sentiment there. To finish it off, we see the options contracts, guys. To the T, there are more options open, being held as open interest to the upside than the downside. My opinion, all of this together, AT&T is a buy for me, guys. My question to you guys is, based on these factors, are you buying AT&T? Are you locking AT&T 7.5% yield Leave your comments below, guys. Now, thanks for watching, guys. If you found this information helpful, do me a favor, hit the like button, share, and subscribe, guys. Subscribe, all right? Thanks for watching, guys. Leave your comment below, and bye-bye.